So today we're diving into a huge topic here in California. Of course, this is the massive issues surrounding homeowners insurance. With wildfires ravaging Los Angeles right now and insurance companies pulling out of the market, I'm going to do my best to break down how this affects all of us here in California. Also walk you through how the California Fair Plan works and whether it's a viable option for you. So stick with me, especially if you own or plan to own property here in the Golden State. So over the past few years, homeowners insurance in California has gone from challenging to downright chaotic. And the main issue, of course, is wildfires. So here's the deal. Wildfires in California are becoming bigger, more frequent, and way more destructive thanks to changes in climate and rising temperatures. One recent study even found that the area burned by wildfires has increased by 500% in recent decades. But here's the thing, it's not just about climate change. Land in California is at a premium, and as the population grows, more and more neighborhoods are being built closer to wildfire-prone areas. Developers are pushing the boundaries into high-risk zones because, frankly, that's just where the available land is. When you combine hotter, drier conditions with homes nestled into high fire zones, it's a recipe for disaster. And this isn't just a rural problem, it's impacting suburban and even upscale areas like the Pacific Palisades in LA, as well as a number of neighborhoods here in San Diego. Insurance companies have taken notice, and their response has been to pull out of the riskiest markets like California, leaving homeowners scrambling to find coverage. Just about a month ago, before the wildfires in Los Angeles began, Farmers Insurance announced it would be increasing coverage availability in California. This is a direct quote from a farmer's representative. Farmers Insurance has decided to take steps to increase coverage availability for California consumers because we recognize that the state's insurance marketplace has indeed improved. In addition, with the impending implementation of Commissioner Ricardo Lara's sustainable insurance strategy in the coming year, we wanted to be well positioned to provide even more coverage options to the residents in the state of California. So what exactly is the sustainable insurance strategy? It's a new set of regulations that allows insurance companies to use forward-looking models that factor in climate change when setting their rates. In previous years, companies could only use historical data, which doesn't account for today's extreme weather trends. In return for this new flexibility, companies must write more comprehensive policies in wildfire-distressed areas and other mitigation steps taken by homeowners, businesses, and communities. This was supposed to be a big shift, especially since Farmers was one of the many companies that scaled back operations in California due to inflation, severe weather events, and rising reconstruction costs. And they weren't the only ones. Last year, Allstate and State Farm also stopped accepting new insurance applications for businesses and personal property in the state. Before the latest fires, this was seen as a step in the right direction, but after the recent devastation in Los Angeles, will this still be the case? I sure hope so, but time will tell. So what exactly happens if you're dropped by your insurance company or can't find coverage? Enter the California Fair Plan. It's the state's insurer of last resort. Think of it as a safety net for homeowners who can't get coverage through traditional means. The Fair Plan is operated by a pool of private insurers, not the state, and it spreads the risk among them. But here's where it gets a little bit tricky. Demand for the Fair Plan policies has surged by more than 40% since late 2023. Today, it covers homes worth over $450 billion, a staggering increase from just a few years ago. But here's the scary part. The Fair Plan might not have the funds to handle the catastrophic wildfire season that is currently happening in Los Angeles. Right now, it has about $200 million in cash and $2.5 billion in reinsurance. So if the claims pile up beyond that, which it seems like likely it will, it could run out of money. And if that happens, homeowners across California might get hit with surcharges ranging in the thousands of dollars. Now, if you live in San Diego or just in Southern California, an extra couple $1,000s may not be the end of the world to some, but for those families that are already stretched thin here in California, it could be catastrophic, and they might even be forced to sell their homes. I also read recently that if a fire is started by arson, then insurance companies may not have to pay out. This is mainly to protect against insurance fraud, so as long as you did not start the fire, I sure hope the insurance companies will still pay out. Now, here's a question you may not want to think about, but it's been running through my mind lately. What exactly would happen if your home were to burn down in a wildfire? First, let's talk about your mortgage. If your house is destroyed in a fire, you're still responsible for paying your mortgage. Unless your insurance payout covers the full balance, then you can just pay it off. Your lender typically gets first dibs on your insurance payout to pay off the remaining loan, but if there's any money left over, you can use it to rebuild or buy another property or whatever you want to do with it. A lot of lenders will allow you to defer payments for a period of time if your home is uninhabitable due to a disaster. That will give you some breathing room while you figure things out. Now, what about property taxes? If your house is uninhabitable due to fire damage, you might be eligible for a property tax deduction or deferral. California allows homeowners to apply for a reassessment to lower their taxes after a disaster. It's not automatic though, so you do have to file the necessary paperwork with your county assessor. So the bottom line, losing a home is obviously super devastating, but understanding how your mortgage, lender policies, and taxes work in these situations can help you prepare financially and hopefully emotionally as well. So what's the takeaway for California homeowners? First, if you live in a high-risk area, check your current policy. If you've been dropped or are struggling to find coverage, the FAIR plan might be your only option, at least for now. Second, prepare for higher premiums. We've kind of already done that recently. With regulatory changes allowing insurers to pass on reinsurance costs, and with the FAIR plan's financial struggles, we are very likely to see rates climb even higher in the near future. And finally, just stay informed. This isn't just a homeowners issue, it's a statewide issue tied to climate change, housing policies, and disaster preparedness. If you care about your home and your wallet, this is a conversation you want to be a part of. And lastly, I just wanted to say we are praying for all our friends and family in Los Angeles. I spent almost 10 years living there before I moved to San Diego, and I still have a lot of family and friends there, and a few of them even lost their homes in the fire. I know they will all recover in time, but our thoughts and prayers are with you all. Thank you for watching, and stay safe out there.